Coinbase. Oh my, Coinbase. It is time to talk about Coinbase. Why do we have to talk about Coinbase? Because Coinbase did not have the best quarter. Now, I kind of knew this was going to happen. I'm not Nostradamus or anything, but you put two and two together. The growth market, or the market, sucks for growth stocks. I just experienced it with Palantir. If you're in Upstart, you probably experienced it. If you're in Unity Software, you probably experienced it. Like, things are pretty bad for growth stocks. Coinbase is one of those stocks that you could tell obviously was going to do bad. It was already down like 60, 70% from all-time highs. Went down another 10, 15% after hours today. And the reason for this was because of crypto. I mean, like the fact that crypto is down as much as it is, I think it's down about 20, 30% year to date. And Coinbase relies on cryptocurrencies, and the prices of crypto they're very positively correlated with how Coinbase acts. It's almost like directly proportional at some level. You could tell that Coinbase was not going to have a phenomenal quarter, and Coinbase's stock suffered from it. In this video, I want to talk about why. I want to specifically talk about what happened, and let me show you a little bit of what happened here. So Coinbase now, after hours, is at $61. If we look at it on the max chart, Coinbase IPO'd at $250, right? So they got to $341 at April 16, 2021. This is where they opened, and they just, they went lower. Then they got right back up there. They had price targets of 470 at one point, and it's been a decline from there. The past 6 months, it's also been pretty rough. It was at 336 November 11, 2021, and since then it went down. Now, this is not unusual for growth stocks in this market right now. Everything is getting hammered. The reason Coinbase is getting hammered a little bit more than other people is because of crypto. Now, I want to talk a little bit about why cryptocurrencies are really important. Coinbase makes its money off fees. So if you buy cryptocurrency, if you buy like Bitcoin at $30,000, I don't know how much exactly Coinbase takes, but let's just say it takes a 1% fee or something off that transaction. When you do that, you're taking 1% of 30,000 in order to transact the cryptocurrency on the platform, which is cool, but you're paying 1% of 30,000. So if you're buying it at 50,000, you're paying like 1% of 50,000. So the lower the price of a cryptocurrency asset like Bitcoin or Ethereum or any of the really popular ones starts to decrease, the lower the ability Coinbase has to monetize the transactions, because they are based off a percentage of the price of the asset in the first place. Additionally, fees are not as popular with consumers anymore. I mean, they're willing to put up with fees when it comes to having safe and secure crypto, but not for very long, I would suppose. And I think there's going to be a lot more options to trade crypto more freely, because at the end of the day, consumers, they just don't want to pay fees. And that's kind of why Robinhood ultimately has a user base. So Coinbase numbers. Revenue, Wall Street expected $1.48 billion. Coinbase brought in $1.17 billion. They had an earnings per share loss of $1.98. They fell more than 15% in after hours trading. So the stock has lost more than 70% of its value since late March. And the usage on Coinbase also declined as well, which is another reason I think a lot of people, or at least a lot of investors, were bad. Retail monthly transaction users, these are people that make at least one transaction per month on Coinbase, fell to 9.2 million, down from 11.4 million in the fourth quarter, while total trading volume dropped from 547 billion in Q4 to 309 billion. That's rough. Revenue fell 27% from a year ago. So last year, obviously, crypto was going crazy in 2021. Robinhood had great numbers. Coinbase had great numbers because everyone was trading it, because everyone wanted to get a piece of it. Coinbase was marketing like crazy. I mean, I couldn't go on Instagram or Twitter without getting a Coinbase ad in my face. So they were really going for it. I think they even sponsored a Mr. Beast videos, and Doge was, so it was going hard. And it reported a net loss of $430 million with a revenue fall of 27%. Now, what they said, we believe these market conditions are not permanent and we remain focused on the long term. They have to say this because they believe that cryptocurrency will go up. Will it go up? I don't know. But you can't not believe that cryptocurrency is going to go up, and cryptocurrency is going to be a fundamental, vital architecture of the nature of how people transact things and store things in the context of the values and the medium of exchanges they use. You got to believe it's digital gold at the end of the day. I mean, you have to believe in that thesis if you're bullish on Coinbase. You cannot not believe in that thesis. It's almost like I have to believe, if I'm an investor in Robinhood, that Gen Z is too board of Fidelity and Charles Schwab, and they believe in dopamine and gamification of stocks to such an extent that they have to use Robinhood. You've basically got to believe in that premise if you want to, believe in crypto. So obviously they have to say that. Now, general administrative expenses were up $414 million, up 39% from the last quarter. Overall operating expenses came to $1.72 billion. That's including stock-based compensation. Here was the biggest part. Let me pull up this tweet real quick. This was the one that got a lot of people upset. Did I delete it? Okay, I'll put it up real quick. So I retweeted this. This was a rough one. If we go here, they disclosed something in their filings that were pretty controversial, and that got me scared, and I think it got a lot of people scared if you invested in crypto. So here it is. Coin included new language in their latest 10Q warning that crypto investors that it should warn crypto investors about what might happen to their coins should the company file for bankruptcy. Moreover, this is a quote, because custodial held crypto assets may be considered to be the property of a bankruptcy estate, this would be the company, in the event of a bankruptcy, the crypto assets we hold in custody on behalf of our customers could be subject to bankruptcy proceedings, and such customers could be treated as our general unsecured creditors. What does that mean? That means if you have Bitcoin or Ethereum or Shiba Inu or whatever, Dogecoin on Coinbase, and Coinbase goes bankrupt because something happens, the economy collapses, people are like, oh, crypto's a scam, it was never going to be anything anyway, and like that, the entire concept of crypto just go to crap, which means Coinbase would go to crap, then that means Coinbase would go bankrupt. Now, if Coinbase goes bankrupt, they are saying that because these are custodially held assets, they are subject to the same type of custody that any other asset would be held to if you're going bankrupt. So if you're going bankrupt and you have something that's worth some money and you can't pay back the loan, that thing becomes seized, like a car, like a house, or something of that nature. So if such customers are treated as general unsecured creditors, that means their crypto goes away as well. So if you have one Bitcoin on Coinbase and you're up, 20% on that Bitcoin because you bought it at a good price, and Coinbase goes out of business, well, they need to take your Bitcoin that you're up 20% on away from you and give it to the person or the bank that's bailing them out at that situation. So that was pretty scary for me to see. I mean, I think they got a lot of investors pretty scared. Now, is Coinbase going to go bankrupt? Is crypto a scam? Is it going to go to zero? I very heavily doubt it. I don't think that's going to happen. So I don't think it's the thing that you should be the most scared about, but it is something to think like, man, if this is 2000 and the dot-com bubble really is that bad, you never know. You literally just never know what might happen, and it's pretty scary to kind of think of this. Let's listen to a little bit of CNBC talk about Coinbase as well.
It looks like a miss here for revenue in the first quarter for Coinbase, and a drop here in monthly transacting users as well. The EPS number, we don't have a comparable number for that yet, but this was a loss, $1.98. That's a negative number. The Wall Street estimate, again, we don't have a comparable one, but the Wall Street was expecting a gain here, a positive number. So again, a loss of $1.98 on EPS, revenue of $1.17 billion. That was lower than expected. On guidance, Coinbase lays out three different scenarios here based on market conditions. So again, don't quite have a comparable number, but I want to point you to monthly transacting users. That came in at 9.2 million, down 19%. Quarter over quarter. It looks like the stock here is down more than 10% after hours. They talk about some of the lower crypto asset prices and volatility beginning in late 2021. They say market conditions directly impacted those Q1 results. Again, this business very tightly correlated to Bitcoin prices and to trading activity. Scott.
And that's the key element here, that they are so correlated to what's going on in Bitcoin. That's why I do my morning live stream every day, 9:20 a.m. Eastern, and people always ask, are you buying crypto? Are you buying Coinbase? And I'm like, no. And it's not because I have anything against it. I'm just like, it's too volatile, and I don't know what's going to happen in Bitcoin. And as a result of me not knowing what's going to happen in Bitcoin, it's kind of scary at that point. It's pretty scary. So what's going to happen with Coinbase? What are my predictions or what are my thoughts and I guess overall analysis on this? Number one, they just launched this NFT community. This NFT community is their sort of response to OpenSea. If you guys don't know, OpenSea is like the largest search engine in the world for NFTs. It's a big community and ecosystem. It's valued about $13.3 billion. So if they can incentivize people to start trading things on the platform outside of cryptocurrencies, which is where they take their fees from, which I think is not going to be a business 5 years from now. If you gun to my head, I'm like, the fees are not going to happen anymore. Then it needs to figure out how to monetize users in other ways. Can they monetize their premium subscriptions? Yes, I guess. But they've got to have more of an ecosystem where people are doing things on the platform. And this is what I've said about Robinhood. What saves Robinhood is if they get 401ks Roth IRAs. They introduced this new lending thing. I'm not the biggest fan of it, but at least it's giving options for people to do other stuff, because the average person on Robinhood is not day trading because they just don't have that much money to trade. They're not a sophisticated investor. So, and Robinhood only makes money from payment for order flow, which means you need people to trade. They literally have to encourage you to like do stuff with options and day trade, even though they say they don't, because then they get enough data that they can sell to the hedge funds and to the market makers, which allows Robinhood to make a profit. Their user base just isn't able to do that. So to me, I mean, I said Robinhood should get into NFTs. I'm like, anything that gets people more creative and like feeling something unique on the app. I see Coinbase as just this centralized exchange where you can buy and sell crypto in a meaningful way. I don't think it's very special. I think it's the first one to do it. I think there's a lot of other companies that can do it. The question becomes, what is the unique value proposition to the ecosystem that Coinbase is creating? And I don't think there really is one yet that's that unique. Now, I think it can still become a very, very big, phenomenal company as long as crypto explodes over the next 5-6 years as well, because I think they have the biggest sort of like ecosystem of where people are buying and selling and trading crypto. If you want to buy and sell, trade crypto, and you want to have it on your wallet, Robinhood's not the best place to do it. FTX exchange is okay. Crypto.com is okay. There's some other exchanges that exist, but Coinbase has the best brand in the world. I just think the fee structure is not going to be around forever. And if that's the only way you're going to make business, then it has to be allocated to the price of crypto. So if there's a world in which they can make the business profitable and sustaining without having to be tied to the price of crypto, and I know that's crazy because you're like, if you're betting on Coinbase, you're betting on crypto, but if they could figure out how to do it where you can transact, like the NFT thing, NFTs aren't relying on crypto, not to the biggest extent. Like obviously crypto prices can hurt the value and the reason why you trade NFTs, especially Ethereum. But if you can just get people doing other stuff on the platform, you have other ways to monetize them. And I think Coinbase has to be creative. Now, they also have this lending idea that the SEC has blocked. I think if they can lobby to get people to be able to lend out their crypto and sort of get yields on it in some way, there's business models around that. There's also some innovative ways they can actually make money, but the SEC so far has not been friendly to them on that front. So I think long-term, Coinbase will be in a good situation as long as the crypto thesis remains intact. I don't know if that's going to happen over the next 5-6 years, but presumably we can assume Bitcoin is not going to be at 30,000 in the next bull market, whether it's 5, 7, 8 years from now. The crypto craze will come back again. And if that does happen, Coinbase is going to benefit off of it. But I think in the meantime, they'll be able to figure out some innovative ways to monetize users on the platform and offer new services at the center of crypto, like, Roth IRAs or 401ks regarding crypto. And they're the central asset that is able to facilitate all those things from happening. I'm spitballing stuff, but if that could happen, that could be valuable for Coinbase. Overall, we're going to see what happens. This was not a good earnings for them. Cathie Wood has a lot of Coinbase stock. I'm doing a video a little bit later talking about Cathie Wood's major holdings. It's rough for Coinbase right now, but to me, it's not their fault. Earnings wasn't phenomenal, but the entire market is not going to be happy to grow stocks right now, especially more speculative stuff like crypto, and Coinbase is tied to crypto. So if you're a Coinbase shareholder, I would say hang in there, reevaluate your thesis. And if you still believe in your conviction over crypto and you believe that Coinbase is the place where it's going to control the supply and demand of attention around cryptocurrencies and the exchanges of those cryptocurrencies, then you just got to kind of wait it out and see ultimately what happens. Thank you guys for watching. Let me know your thoughts on cryptocurrencies and Coinbase. I do not own any yet, but I'm willing to listen to a lot of people and their bull case for it because I'm trying to understand a lot more. And I will see you in the next one. Bye-bye.